Yo, what's up? Gonna be going over this World Liberty Finance trade that I took. Pretty clean model, 29 RR on it. Just gonna go over the price action, how I identified the model, and where I took the entry, all that kind of thing. Really just for my own record, my own journal, but thought I might as well post it publicly, so people could learn from it and just to start building that, right? So you can see that we have structure trending down. And within this downward structure, your level 2 structure here was trending up. This is the structure that you had there. So in an uptrend, so we're in this local uptrend within the higher time frame downtrend. So you can look for price to break structure within this local uptrend. Damn, I'm lagging. Within this local uptrend to confirm the rotation back all the way down to this low and continue with the downtrend. So if you can break your structure, which would be this, that confirms the rotation down, but you can also have a level 3 structure within that leg that you can use to determine a rotation all the way back down to this low, which then can determine the rotation down to this low. So that's kind of the environment we're in. So, very favorable for shorts. We are coming up, we are SFPing this local downtrend. So as you can see, we are trending down here. This is your level 2 within the overall downtrend there. And you are SFPing that level 2 structure within the downtrend. So this model is technically aligned with your level 1 and level 2 structure in the downtrend. So you're SFPing that, wicking that high, wicking above this supply block. Price didn't even need to come for this higher supply. End up front running that zone. And you're forming a distribution schematic. So of course in an uptrend you pull your range high to low, and this is what you had there. Check the volume profile of it up to the entry, and you can see you have that nice volume inefficiency where the third tap of the distribution came right to that volume area high, and this is a fairly strong volume profile, as you can see from the nice peak right here on the POC in the volume area high to show good ranging price behavior within that region. And range theory suggests that price oscillates between volume area high and volume area low. So you come up, you deviate above that volume area high, and then you can see a rotation down to the volume area low, deviate the volume area low, make the rotation back up to the volume area high, deviate the volume area high, and make the rotation back down. And eventually ranges will always break to either the upside or to the downside. You're not going to range forever. So this right here was the confirmation that we could see the rotation all the way back down to here was within that break instruction, that in that final leg up right there. So you can see we had really nice price behavior within this second tap as well, because you're just wicking the high into that market structure SFP, showing clear signs of market makers exiting positions, building up a super clean return to zone with basically no clear supply zones. Like just on this time frame, you can see a little tiny supply, or little tiny demand zone there. And then most of this is literally just liquidity. You can zoom in, straight liquidity on that pullback there. So that's super nice. Coming into this extreme supply, you actually wicked the high of that supply block. So don't think that the supply is fully failing just because you are wicking the block. As long as you wick the block and you're not getting closes above the block, it doesn't mean that you're gonna come up for all this liquidity. You can easily just wick the block, with a nice topping formation before getting that rejection. As you can see, same exact thing happen here. You see it all the time, where you have this nice looking block right here, and just because you're starting to come up above it, just because price is starting to come up above that block, doesn't mean that you're going to come all the way to the supply zone necessarily. You can always wick the liquidity of a block, still rejecting from that overall block. They're filling the orders here inside of this supply zone. They're filling the orders, and then they just want to fill their final orders within this region by taking the liquidity of the block. And after this move up, finally wicking the block, you got the nice move down, and it just created a very good macro pivot right here. So, and created a really nice supply zone as well. So when taking this trade, I did take a 0.5% loss on this breaker structure right here. This was front running your high probability supply zone. It came into this lower supply zone and swept the extreme liquidity. So technically a valid entry, because you don't need to come to this supply zone for it to be a valid entry, because one, you already had the liquidity sweep above the deviation of tap one, and you had the supply mitigation above the deviation tap one. So that's a valid entry. It just has that room for error that you slightly front ran your POI. That's why I took it with the 0.5 risk. And then once you get your confident confirmation, which here this wasn't super confident because you're just kind of wicking the low there, technically that could be an entry. I actually wasn't available. What timing was this? New York on Saturday, 7:30. I was probably sleeping at 7:30 on Saturday, but yeah, so this could have been a valid entry right here on this close. But then what happened is we got a super high probability pullback locally here into the extreme supply, allowing for an even more refined and cleaner overall entry right here on this 5-minute breaker structure that I ended up taking right there on that close right there. Bang. So you're able to put your stop loss above that high because there's no more supply zone, no more POIs that price may want to come for above that high. So yeah, super nice there. And you can see price immediately got, you got the super aggressive break, and then you got the aggressive demand retest, which can happen. I've seen it many times, and a bit of a slower move before it picked up the momentum to the downside with, again, another liquidative move up, stopping a bunch of people out who were shorting, who, were trailing their stop losses prematurely before continuing with the bearish move. So yeah, overall, super clean model. One room for error in this model was that you could come for a model 1 if you price wanted to come all the way up for this zone, because just because, like I said, that price may just want to wick the block, can easily come up and take the higher up block right there. So that was some slight room for error, but nothing that would hold you back from taking a trade of this caliber. Now we can see, judging off the chart, we can see the rotation all the way back down to this low. I don't plan to hold it that long just because it's a very high time frame model, and because we have Bitcoin coming into that 74K level. So this can easily continue downwards, but for me, I'd rather just bag the 29 RR and go home with it, right? So the context, also just to note, the context on Bitcoin was pro context, because at that time we were in a bearish PO3. So at the time of World Liberty Finance confirming right here on Saturday the 24th at 17, Saturday the 24th, Bitcoin was right around this price region, with this being the confirmed order flow objective right there. And yeah, that was when World Liberty Finance confirmed. So we had a pro context on Bitcoin, semi-pro on World Liberty Finance. You could even technically call this pro because you're in a higher time frame confirmed downtrend, and you're getting that level 2 up, and you kind of like SFP'd it. Yeah, you can just call this semi-pro / pro, something along those lines. It doesn't really matter. It's still extremely good context to take the short, depending on how you want to define it, right? So yeah, I think that's all I got for this one. If you guys liked it, let me know. But I appreciate you watching. Have a good one.